What up, words man? Dream with Dream Motivates. Welcome to another edition of the Entrepreneur Blueprint, where we find entrepreneurs that are killing it in the game. This is a very special segment. This is a segment that of all the other segments that I've ever had, you probably need to bring out your notes because there is some life-changing information coming right up from my special guest. Stay tuned. We are in the building. Welcome again. Listen, I definitely am excited about today's dialogue. So many things are happening. So many things are changing within our economy. And I want to give my viewers, first of all, special thanks for being so loyal to me by liking, sharing, and subscribing. And if you have anybody that needs this information, I guarantee at the end of this, you probably want to share this immediately. With no further ado, the third time on the show.
Yeah.
So you know if it's some good food, you got to come back to the restaurant because, you know, they serving it up really good. But I want to give it up for my sister, Dr. Loretta Walls in the building. What's going on, sis?
Oh, nothing. Thank you for that warm welcome.
Yeah, listen, I want to go straight into it.
Okay.
And I kind of want to go a little rapid fire.
Oh,
And I want to go a little raw and uncut.
okay.
Now, me being your brother, like we're this is business, but you're also my sister.
Okay. Yeah, that's true.
And we've had some very, very raw and uncut offline conversations about what's going on in the world. I want to give it up to you just by letting people know you have definitely helped me with my finances and helped me with understand what's really going on when it comes to educating us as far as financial wealth and what we need to be doing. And I never forget at my conference at Proximity, when you were giving your testimony, how you got emotional.
Yeah, I forgot
You
about
remember that? Yeah.
I forgot.
And how you were, and that really says something to me about you and what you're doing, because for those who didn't see the other episode with Dr. Loretta, she's a real doctor. I make a joke about her. She's not the Dr. Pepper or no discount to the people that are a doctor. I mean like scalpel. Like she's a real doctor. Like and she walked away. I think you still do some advisories.
I'm on the business side, yeah.
Yeah, but literally went from there to say, you know what? I need to financially help my people.
Absolutely.
And I just want to dive into what's going on with the world right now with a couple of questions for you. And let's get right to it.
Let's get to it. Let's go.
Okay, so you posted, for you guys, go ahead and check out, and I'll probably put our social media at the end. You posted something yesterday, which was probably one of the most. The post got me so. I mean, it had me.
It has
like,
you thinking.
It had me. It hit me,
It has you thinking.
and it was a repost that you did. And I think that was dope. That
And
you
it's
did
an
that.
old post at that. I just, an attorney friend of mine sent it to me again, and I was just like, it's time to let the people know again.
Yeah, and let's kind of. I think I'm gonna try to play this clip. I want to play the clip, and then cut and edit, and for you guys to look at the clip. But I want to come back here too after we've seen that clip, and basically, let's kind of reiterate what was going on in that clip, and then I want you to kind of tell me what your thoughts were when you seen this clip. Okay, so in this clip, and tell me if I'm wrong, there was a guy. And he was just looking at the post and he was eating it. I don't know what he was eating. It was so nonchalant. It was like, what was the question he asked the guy first?
If you could tell black people one thing, what would you say? And then the guy answered.
You talk about the jab. Now listen to what the answer was. And I think I'm gonna try my best to make sure we play the clip. But just in case, what did he say after that?
I'll paraphrase because I don't know exactly, but he basically said that if every black person got life insurance, it would end wrongful deaths in the community. 300,000, 500,000, 1 million. It will decrease that wrongful death in our community, whether it's by police or by anyone else.
Now my mind went somewhere, but I know your mind, being in this business that you're helping so many people, because you help people with all type of finances. What did you get from that statement? Like in a practical mode that people can say, okay, basically what he's saying is.
That's a good question, because one of the reasons, I'll preface it with this, one of the reasons I'm super passionate about what I do, because I understand finances and health and wellness at a deep level. And so when I see the existing wealth disparity that exists in our country, when I see the existing health disparity in our country, when you really take time to focus and study it, you can see where it began and why it's still facilitating and perpetuating throughout the lives of every person in this community. I said that to say that because of so many things that contributed to us having a wealth disparity. It could be colonization. It could be, and by that I mean moving people from their native land to another place. It could be slavery, segregation, marginalization, the perpetual oppression of black and brown people, the redlining, all of those things that contribute to people not being able to build wealth effectively, consistently, and at a scalable level. You see that there are only a few things that can be done to remedy that. And one of the things that we have power to do would be purchasing and life insurance and keeping it. Now, if you really follow how money flows through this country, if you really understand that old money is life insurance money, trust fund money is life insurance money. One of the only ways to protect assets, wealth, replace your income, protection against sickness, death, disability, old age, is through life insurance. Otherwise, you cannot. It's no other way that you can spend $20, $50, $100, and then end up with $1 million. It's no other way. Unless you get really good at business and you sell a product that really
goes viral. Yeah.
And but before you do that, you have to have overhead to be able to create that product, produce it, mass produce it, and things of that nature. The only scalable way for working class people and below is to purchase something that is guaranteed future net worth for their families and their future generations. But then also, not just working class citizens, high net worth individuals, people who make decent income. There's only certain ways that they can replace their income, protect their assets, rental properties, investment properties, their investment financial vehicles.
When that guy said that, and I'm trying to.
I'm getting around to it though.
Yeah, because I'm open to dialogue, because when he said that, my brain was like, wait a minute. So
I'm getting around to it. So I'm taking you on a trip. On a trip. So
I know you. No, go. I need raw. I need this. No, right here.
You saw me hesitate.
I see you like no. Yeah, let's go. Let's go.
So I'll take you on a trip. So if there's only one way,
okay,
that a person can use a small amount of money and guarantee millions or $500,000 or several million that will go into generations to come. If there's only one way, then every individual should have it. But peep this. Every time a person passes away and they have life insurance, whether it's 500,000, 1 million, it injects that money into that community. So if
Oh wow.
if a black man is killed wrongfully or for whatever reason, the insurance company has to pay the beneficiary. Let's say it's $1 million tax free,
Now that goes
and
into
it
that
bypasses probate.
Got you.
Now it goes into their community,
Oh, it bypasses probate. Whoa.
tax free.
Got you.
So people, we're born and we die. So if we know those are two constant factual things that happen, when someone passes away, their family should have a legacy and wealth that is immediately created because of that guaranteed thing to happen. So when there's a group of people, a huge demographic of people who do not have life insurance,
Got you.
soon as they pass away, no one gets rich. They actually get poorer.
Oh,
Nobody cares.
right. Damn.
And they're disposable. But imagine the insurance company having to pay out $1 million, $2 million every time there's wrongful death from whatever reason.
Now,
They would probably rally
that's
about
that is
decreasing
right.
that crime.
You know what? Okay, now I get it.
Okay? You see?
Okay. All right. So there's a part 2 to this video.
Okay.
Which was even more heartbreaking and devastating. And when I heard it, I was like, wait a minute.
Okay.
And we're definitely playing the clip. And this was from my brother. And Charleston, I definitely need you on this podcast, bro. I think we got some people that's going to talk to each other. But I definitely want you to come onto the podcast and elaborate on what you're saying. But I want to get Dr. Loretta's opinion on this. And to paraphrase, in so many words, that he says that the churches are setting us up for failure because they're in bed with the state. Now, this is based on his opinion, obviously, and I'm just kind of, putting it out there. I can't just state that as So this is opinion, but based on that statement, it definitely had me thinking, because Dallas, Texas, is the Bible Belt.
Yes.
That's what they call us, the Bible Belt. You got mega churches, literally within 15-mile radius of each other. How do you feel about that statement?
I don't like overgeneralizations, but he has a point with where he's going with that. The work that I'm doing in the financial industry leads me to believe that he has some merit to his statement.
Yeah.
One of the reasons I created a financial literacy firm is because I realized that a lot of people know very little about how insurance products or financial products really work. And so, to his point, an individual can own life insurance. A trust can own life insurance. A trust can be the beneficiary. That's usually how it's set up. An organization can be the owner and the payer of life insurance. And so you see businesses, banks have billions of dollars in life insurance. Billion with the B.
Golly.
Does a bank bleed? One of the reasons they do so because life insurance assets have tax codes just like other financial products. Just like your 401k, just like your IRA. All of those products have a tax code. And life insurance is considered tier 1 capital because it's one of the safest places to store and recycle money.
Because of the compounding.
Compounding, but also you can leverage the death benefit as collateral.
Got you. Because it's inevitable.
Yes. And so the tax code associated with certain life insurance products allow it to pay out tax-free, but also those who have cash value in those products allow you to access and grow that money tax-free as well.
And I think that's so, because when Charleston said it, it had my mind racing 100 miles an hour, because any organization.
But
I
any
don't care.
organization.
Yeah,
But I don't
care.
think everyone is aware of that. That's the point I'm making. I think that people are not aware because the more people I meet now, I've been in this industry 6 years. Every person I meet is missing more than 75% of the information.
Yeah.
Just because we live in a world where financial literacy is not taught,
Yeah.
especially in the places where we spend most of our time.
Yeah. Correct.
Elementary school, high school, college, at church, your workplace.
Yeah.
No one's teaching these things. And
is that, you feel like that's systemically
and I feel like,
set up?
yes, I feel like that is, I think it's by design because the more we stay ignorant to all facets of where money goes, how it flows. When you follow where money flows through this country,
where the money goes,
you will see that life insurance is at the foundation of that. Because money is a currency.
Yeah.
And currencies and currents must stay in motion. And the way that money stays in motion is through insurance.
Gotcha.
Because if it's not recycled, it stops. So it comes in and it goes right back out.
So the reason why they are not doing it is basically they just don't know.
I think majority of the reason is because they lack information as to how to do so.
And which is kind of disheartening because here we go.
And I'm not saying this just out of assumption. Like I've seen and I've talked to people. Most people, if not all people, are missing more than half. I'd say 75% of the information.
I mean, like, let's just be real when it comes to churches, right? So, you know, you get christened when you first get here on the planet. You know, you have the little ceremony with the babies here. And then when you leave, you exit out the church too.
So one of the things that is very important, and I try to live my life by this, is to understand the disparity that exists. We all were marginalized. We all were made to believe that we just accept what we have. We've all been infused with so much other topics and information that if you look at life, at how busy people are, how hard they have to work, they go to work, pay bills, take care of their family, and do it all over again the next. It's a setup, and it's just not a lot of time to interrupt that cycle to figure out what's actually happening, how to change it, how to apply solutions,
how to reset, because you're literally going from check to check, trying to pay the bills, trying to figure it out. Who has time to sit there and learn a whole new world of money?
Literally, across the United States, 60 to 70% of the people, regardless of income bracket, live paycheck to paycheck. And one of the number one causes of poverty in this country is chronic and critical illness. And so one of the other reasons why life insurance with the right income replacement riders is so important, because if chronic critical illness and accidents are the number one cause of poverty, then the solution is having income replacement when those things happen. And when you think about, if myself, I'm the person generating income, something happens to me where it stops and interrupts my ability to generate income, how do my bills get paid?
Yeah.
And typically your first line of defense, your savings account, checking account, how long would that last? Would it be 3 months, 6 months, 9 months? What happens if you're out longer than that? One of the common things I hear people say, well, I have all that with my job. There's a common misconception with the benefits that we have with our job. When you sign up for your job, you get your W-2 papers, your W-9, you get your benefit package. But it's not explained. So short-term and long-term disability is different from long-term care. So if you get sick at your job, typically your disability coverage will take care of 60% of your salary. So if you're living off 100% of your salary, what fills in that 40% gap?
Man.
You eat up your savings. You eat up all of what you've kind of tried to store away for the future. Then you have to tap into your retirement account, which causes taxes and penalties.
Yeah.
And over time, you kind of wipe out everything that you worked for.
And it go fast. Jet fuel. Gone.
So one of the ways to remedy that is have a plan in place for every transition of life. We will get old. And if we get old enough, we'll get sicker and maybe disabled. And then if an accident happened, now we can't go to work, we will have a situation where we need supplemental income. Why not plan for that early enough
Yeah.
so that when it happens, not if, when it happens, you're prepared. And then when we do, we will die. We mentioned that earlier. We will pass away. When income is suddenly stripped out of our households, statistically, it says that it takes a family 10 years to recover financially.
Man.
So if you're paying the mortgage and then now that mortgage payment is gone, what does your family have to do?
And I'm gonna tell you my testimony on that. I mean, I know you know my story, but just for context purposes, this is real what she's saying because, and never forget I would talk about it. January 5th, 2013. I got the call. My mother passed away. I didn't know I could cry this way.
Mm-hmm.
Like this is a pain that I don't even understand. I can't even. There's no words to put this pain, right? And on top of that pain, the next morning, I get a call saying we didn't have insurance on her. So on top of me grieving to the level past 10, I don't know whatever level past 10 that is, I'm beyond grieving at this point. Out of my brothers and sisters, I took it the hardest. Some type of way. I mean, I don't know why, but I took it the hardest. My stepfather called me and said, son, we need to talk. I didn't have insurance, and his thing was they let it lapse. She had insurance. He let it lapse, and he said, to be honest with you, I thought I would go first. So I don't know exactly what that meant, and I didn't have the capacity to understand what that meant. But long story short, he mentioned cremation, and I just couldn't fathom the thought of fire burning my mother.
And think of cremation is still at least about $4,000 or $5,000.
And I couldn't think. I couldn't.
I know. Yeah.
Like it was, and so I had to. At the time, I was DJing and I was throwing parties and I was just doing my thing, and we had just put down deposits for our wedding. So my mom passed away January 5th, 2013. I got married November the 16th, 2013. The last time I seen my mother before January 5th, look how fast it happened, was Thanksgiving 2012. So I had like a month and a half of last time I seen my mom. It went that quick. Stage 4 lung cancer. So I'm just like, what? And I was just like, God, what am I gonna do? I just put down all this money for the wedding. I mean, I'm tapped, to be honest with you. And only thing I could think of, I opened my garage, and I just looked at all my DJ equipment. And I said, this is it. Because there was a guy that literally was calling me every other month, like, bro, I'll buy it right now. Give me a deal. I'm trying to start DJing. I called him up and I said, hey, bro, did you get your equipment? He said, man, nah, I want what you got and I can't find. Everything's so expensive. So I made him a deal. He came pick that thing up quick, brought me a cashier's check, and I didn't do the GoFund. That was just disrespectful. I didn't do the GoFundMe. I didn't do the woe was me thing. I took it to the chin, sold all my equipment, and made that happen. But there's a lot of people that are in that situation like I was, and maybe they didn't have DJ equipment.
Right.
So now we're going to the GoFundMe situation, which they take out percentages and however that works too. And it makes us look, I don't know. It's just, and I think this is a very crucial time right now because we are getting more educated and this stuff is being put out there, but the right information needs to be put out for people to be prepared for the inevitable, like you say all the time.
Absolutely. And especially since this show is about the entrepreneurial blueprint, it's so important to understand. No, like right now there's a requirement when business owners are going to get business loans, they have to get life insurance that guarantee that money back to the lender.
Mm-hmm.
Why? Because I already told you it is tier one capital. It
It's
secures the
secured
money.
by the death benefits. Yeah.
What most people don't realize is that when you look at the financial industry, the insurance industry that is a part of the financial industry is one of the most financially secure industries in all of the financial realm, simply because by law and regulation, every dollar that they have to give to a person, they have to have a dollar for that dollar. Where a bank can give out $10 per dollar. It's called fractional lending.
Okay.
And so if a person has a dollar for dollar for every dollar that they give out, that means they can match whatever $500,000, $1 million policy, so on and so forth. As opposed to one of the reasons you've seen more banks fail is because they had to lend out way more than what they have in fractional reserve.
So I want to talk about banks for a second. And I remember, I never forget the day. I remember I was in my living room, and you came over, and you told me something that pissed me off. And I was pissed off because I feel like I've been under a rock. And this is what you told me. You said, Dream, do you know that, number one, you told me two things that pissed me off. You said, number one, you said, do you know that banks take your money and put it into insurance accounts so they can compound the money off of your money? And I was like, what?
Yeah, you have to understand a bank is a business. Their product is what? Money. Where do they get the money from? Us. We take that money, put in our savings and checking account. They give us 0.01%, and then they go and invest and diversify that money. They put it in bonds, real estate, and they also put it in life insurance assets. Banks have billions with a B in life insurance assets because that's how they're securing and recycling their money. So when you hear that concept of becoming your own bank, it stems from how banks use money. Because they use it, they compound it, protect it, grow it, and then when you need a loan for a house, a car, a credit card, or whatever the case may be, they lend it back out to you at a higher interest, so that money is making interest several different ways.
That's crazy. So their money is making money, and that's the key. So on top of that, you also said that, you know, and I joke about it all the time. I got a friend of mine that he told me the other day, he said, man, I just like looking at my account to see it grow. And you told me that's the worst thing that you could do one of the worst things you do with money, because your money needs to be placed in a compounding interest account so it can literally make more money, because it's not making any money. It's making a very small amount of money inside of a bank. For instance, I think you said the number, but for context purposes, for people to understand what I just said, let's take $100,000 in a 365 calendar year. Just a round number. What do you think how much that money would make if you just didn't touch it?
0.01%, less than 1%.
So what's that, like $100? Is that like $150, $160? Golly.
It's not anything. But not only that, though, Dream, you have to understand, inflation is the increased cost of goods and services. So basically the increase of cost of living. So if the cost of living is increasing, but the growth of your money is not keeping up with that, it's depreciating in value.
Right, because $100 ain't $100.
So if inflation is 3%, your money should minimally be growing at 3%, not 1%, not 2%, not 0.01% like it does in your savings account.
Right.
And in your checking account, you get nothing. Your money should be keeping on pace with this and then outpacing cost of living, because everything above inflation is wealth that you're building. One of the mistakes that we kind of make is we sensationalize savings. I try to take that word out of my vocabulary because when you romanticize savings, it sounds good. Oh, I'm putting money aside and I'm saving it, not spending it. It sounds good in theory, but the word that I like to replace savings with is growing. How much of your income are you growing? Because what happens is when our money is stagnant or depreciating, we stay on the revolving cycle of making money, exchanging all of our time for money to pay bills. We make a little extra, we pay taxes, get a raise in tax bracket, we pay more taxes, and you do that over and over for 30, 40 years. And it's so hard to interrupt the cycle because the only way to do so is by compounding and growing your money.
So for round number purposes, instead of a person taking, just round number, taking $100 bill and taking $25 of that $100 bill and put it into a savings account, you're saying take that same $25 and put it into a compounding account so it can keep up with inflation and it's making the money on top of the money.
Because that's the only way to interrupt the cycle. That whole cycle we were talking about, life is so busy, we're working. We continue that until our health fails us or we're forced to retire in poverty. But if we begin early, the magic in compounding lies in the interest rate in which you get and also time, because it doubles your money over time. And you can double your money several times before you need it just by leveraging it early. So when we don't interrupt the cycle, we make money and it goes right back out the door. But people who are financially secure and stable and are good with money, they make money and they make that money make more money. And then they live off the growth of that money. That lifestyle lives off the growth. We also have been indoctrinated to think, okay, I'm going to make money and pay my bills. And then we pay ourselves what's left over. And typically it's not enough left over because we're not keeping up with cost of living. But we should prioritize paying our future selves first, pay our bills after that. But a portion, we should be growing about 15 to 20% of our income.
So let's educate everybody for this. And I never asked you this on camera, but I think it is good because we need to be educated. Everybody needs to be educated on qualifications. So, shout out to you. You've been an athlete all your life. I always catch you on the track. You doing your thing. I don't know if you be doing meditation and you be out there doing your thing. And me and you, I'm always standing in the gym. You know what I'm saying? Because so we understand that at the end of the day, health is over wealth, right?
Yeah.
And I mean that. Like, we could talk about the bag. We could talk about a whole bunch of money. We could talk about saving. We could talk about health over wealth. But watch this. We're going to prove to you in this next probably 4 minutes how important your health is. Let's talk about qualifications for even getting health insurance or insurance.
Period.
Period. So if somebody comes to you, what is just off the top, the immediate disqualification? Some of the immediate disqualifications. So, hey, we're not selling nobody a dream. We tell you the good, the bad, and the ugly, that if these are some things that you need to work on, let's get started right now. And she is a doctor. And so I want to talk about how we can either some remedies, some new life changes to help it. But let's talk about the disqualifications off the top that can disqualify you from getting. And I know that's hard for you because
No. I do it quite often. Okay. So I think it's a very relevant question because a lot of times we are not connecting the dots. One of the reasons I call myself the wealth and wellness strategist is because there is a direct correlation with our ability to build wealth based on how healthy we are, our whole selves, our mental and physical health. And so if we said from the beginning that one of the major ways, maybe the only way in my book to guarantee future net worth is by having life insurance and the right asset protection. Whenever you get life insurance, depending on the type that you get, you're going to, for one, always have a health underwriting. And then if you're getting a financial product, you also have a financial underwriting. The health comes first. So if you're unable to get the guaranteed way of creating future net worth because of your health, that disqualifies you for being able to inject millions of dollars tax-free into your family legacy. And so when they look at the health, they consider, one of the reasons they're looking at health is because they're assessing a risk class. And that risk class tells them how risky you are. Basically, how soon before your mortality meets us.
Yeah.
And so they consider your age, how long you've been on this earth, and how much longer you have. What did I say the magic in compounding lies in? Time. And the interest rate. So they
look at your time. How much time you got?
Yeah. How much time is behind you versus how much is in front of you. Ooh. They look at your gender. Sorry, guys. You're riskier than women.
Really?
So your cost of insurance and your gender is a little bit more expensive.
Why do you think that is?
Because you guys do crazy stuff.
Yeah, there you go.
You just do risky things.
Gotcha.
Drive fast. You're more likely to do a risky activity, bungee jump.
Yeah.
Just crazy stuff.
Motorcycle.
Yes, that kind of stuff.
All this craziness. Yeah,
sports cars.
Sports.
Yeah.
Playing sports.
Yeah.
Yeah,
and when you need to be kind of stretching and doing Pilates, you trying to play basketball. Right. No shade, no tea, but sometimes our joints don't like that when we're 40 and 50.
Yeah.
So, but for that, and then they also look at your health history as far as what chronic illnesses you've had, what critical illnesses, how many hospitalizations, what medications you take. Mm-hmm. All of that are kind of giving points to your health underwriting. Gotcha. And the older you get, that means the more time you have behind you, which makes your cost of insurance more expensive. The unhealthy portion of your health history also make your cost of insurance more expensive. So then if you have two dings against you, now if you didn't interrupt that cycle by growing some of your money, you may not have enough disposable income to kind of create that guaranteed net worth. Or you just may not even get approved.
And the earlier you start, the better. Because the younger you are, the quicker you are to get approved,
literally. Yeah. I encourage people to get their kids' policies as soon as possible. We're seeing this epidemic, this rise in neurodivergent diagnosis like autism, ADHD earlier and earlier for our communities. They can't get approved.
Oh, really?
So if your kid 15 days old before the diagnosis, which you get the diagnosis at 2, get it before the diagnosis.
Wow.
You just don't know because...
Wow. Okay. Wow. Triple wow for you. So
this is what I'm seeing in the athletic in sports. Like when I work with my professional athletes, my NFL players, my NBA players, I have people wanting, begging, have me searching all of the carriers to get them approved. But think about it, NFL. Yeah. You get hit by a truck every time you play.
Concussion every day.
Concussion protocol. Yeah. Injuries, joint injuries, back, leg, knees, ankles.
Yeah.
It disqualifies you sometimes.
Banging yourself up all day.
And the way that you would like to protect your assets and protect your income, you should do it as soon as possible. So think about it. We have our kids in sports early. Yeah. All of that factor in their ability to get approved. And we don't think about it until it's too late. Yeah. So one of the reasons to get it early, while you're the youngest you'll ever be, and a lot of times the healthiest we'll ever be, we have to get covered. Yeah.
Yeah. Mm-hmm. And I, shout out to my son. I had a very scary moment. I don't know if I told you about what happened to Joaquin. Mm-hmm. This is last baseball season, and man, it's so crazy that God gave me this. Your mother or father instinct. Mm-hmm. So Joaquin goes up for this Odell Beckham catch, and he goes in and literally collides.
Oh my!
With another guy, and I'm talking about, and I run top speed to the field. I'm talking about top speed, and he's oh my God. And blood is everywhere on his face. And and I couldn't even see. It was all in his hair and everything. I was so scared. And he was just scared. Daddy, I'm bleeding. It was just like, the whole place was just quiet. And I carried him and I pulled him out. and I knew better to apply the pressure onto his head. And somebody gave me paper towel, and I hit him real hard onto his head. It's like hold it down, and I wiped the blood away so I can see where the
Where it's coming from.
it was literally a tooth mark.
Yeah.
That's all. It was a tooth mark, but
The
obviously
vessel.
the vessels in your head is just coming out everywhere. So I stopped the bleeding and put a Band-Aid on, and he was like, "Okay, what I do?" So get back out there in the field. And I did that, and everybody was like, "Real?" I said, "No, he gotta get back out there." And I did that because I know he'll always remember that day. But I was fortunate that nothing crazy happened.
Right.
But you talk about things that do happen, and you're not
Unexpected.
and people don't have the insurance. Is like what you're saying, and which makes so much sense. And you guys, they actually ask a person how tall they are
Height, weight.
and how much they weigh. Now, is there a disqualification ratio off the top?
It goes by your BMI.
Really?
So I was just explaining this to one of my financial professionals because I also train financial professionals. We had a client that wanted a retirement account, but they also wanted insurance, and so we were going through the qualifications, and they set their weight, and so we still apply, but the coaching part for the financial professionals just and you look at the underwriting guide, you see that falls outside of the approval rating. Now, it may be an automatic denial or decline, but it could be a rating, which means their cost of insurance may be 200% or 300%. And so one of the reasons that is like that, because remember what I said, they assess a risk class, how much time you have left on this earth. I'm a wealth and wellness strategist, so I understand that obesity is a chronic illness. A lot of times people try to shame people and say, just go to the gym. But one of the reasons just going to the gym, especially for morbid obesity, is because it's an illness that causes massive inflammation throughout the body, and it affects all organs. And so it increases your risk of mortality with your weight. And so that's not to fat shame or to talk about people who are working on their weight wellness. It's just to identify and make us aware of how it interferes with our ability to build wealth.
From a doctor's perspective, just on that briefly, we already know, Jim, we got that. But from a doctor's perspective, in that case of a person is trying to get insurance at this very second, and they... it's literally at this second a matter of life and death. What is the doctor saying? This is what you need to do.
I tell my clients, you're very lucky to have an actual healthcare provider and an actual
we got the doctors in the building.
You have a licensed financial professional and a licensed healthcare provider. And so when my clients, I actually give them a wellness strategy. I said, this one's on me. This is a free one. Now, if you come see me on a telehealth visit or at my clinic, then you got to pay. But if you're my financial client, I give people strategies, some things that they should go talk to their doctors about, some things that they can work on to increase their chances of getting approved. Or if they get approved and it's so expensive, let's work on changing that between now and 365 days so you can ask for a better rating.
So on the Entrepreneur Blueprint, can we ask the gift from Dr. Wall today?
What is it?
To give us a generic, hey guys, if you are in the midst of slight obesity or you're overweight, this is what the doctor ordered. What do you tell us to do right now?
Okay. Just for you, just because you asked nicely.
I appreciate that.
Definitely increase your physical activity. That may mean the gym, but maybe if you don't have the means to go to the gym or the time to go to the gym, just make sure you're getting at least 30 minutes of physical activity to where you're increasing your heart rate and also lifting weights. So if you don't have any weights, you can use the furniture in your home. But doing that so that you increase the ability for your body to use sugar properly. So a lot of times when we're sedentary, we don't exercise, our sugar just stays in our blood and it causes us to retain fat and it messes up, the whole equilibrium of our health. And so that's one thing. But also go to your healthcare provider or work with a weight loss specialist to have medically guided weight loss appointments. One of the weight loss programs that we have at Wild Wellness and Associates include nutritional guidance, exercise guidance, but also if medication is warranted, then medication. But before all of that, before the treatment plan, you get with your provider to get your labs drawn to see if you have insulin resistance, if you have prediabetes, diabetes, hypertension, cholesterol issues, cortisol issues, and things of that nature. Knowing when to work out, knowing how to sleep, all of those things incorporate your strategy for losing weight. How are your thyroid levels? All of that stuff that makes it harder to lose weight. You get that assessment and then get that treatment plan that is customizable to your labs. Your vitamin D, how much protein intake, how much water are you taking in? All of that must be assessed and treated so that everything that you are doing as far as exercising is really counting and working towards the improvement of that.
I love that. And I want to throw something out there. And I mean, this is a recent find out. Matter of fact, February is when I kind of got this information. It was the day after Valentine's Day. And Junior was getting all crunk, and we've been spending a lot of time in the batting cage. And I just had a really good father and son moment with my son. And he looked up at me and said, Daddy, and he, Joaquin, he's such a, lovey-dovey dude. And he actually said, Dad, I really appreciate you always spending time with me and helping me get better. Will you always be there for me?
Oh.
And so
it hits you in the gut.
It hit me hard. And so, I don't lie to him. I tell him, I don't lie to you. But I said something that could cover up the inevitable, which I said, I promise you that I'll be here to work with you as long as I possibly can. So the next day, I just started studying and doing everything. And the simplest, easiest, why didn't I just understand this in the beginning? I don't know. Something clicked and it hit me in TikTok at 3:00 in the morning. That next day was I was just up and I was working. And I found this out. And hopefully this helps everybody else. And as a doctor, you can probably elaborate. That the guy said that sugar is the cause of a lot of situations. Just like you said about the blood. And he said if you were just to eliminate sugar, period, out of your diet. And he said the crazy thing is a lot of people don't know that bread turns to sugar.
Yeah.
I didn't know that. So
most carbs.
Yeah, I had no idea that the bread turns into sugar, right? So he said just eliminate it as much as you can, and you'll literally start seeing some crazy results. So I started that, and literally I kept it. And I don't, very rarely I might eat, some rice, but I don't eat any bread. I don't eat none of that stuff, and I've been pretty clean for the most part. And literally, it's literally been working for me. And from a doctor's perspective, is that something we all need to be on, especially if you're trying to get qualified, for.
Absolutely. So kudos to you to being able to cut that out of your diet. But one of the other things that we have to realize, sugar is also addictive. It literally lights up the same part of our brain that lights up when there's heroin in the system.
Whoa.
It's addictive. And it's in everything.
Yeah.
And so when we live fast lives, when we're overextended, not enough time in a day to get everything done, 9 times out of 10, we skip meals, which makes us crave sugar and carbs and things of that nature. And then you have to get something quick. So you'd be surprised how much food has sugar in it. And so the first thing to do is to kind of just become aware of that. That's what's happening to you. Then interrupt that by just paying attention to what is in the food that you're eating. If you can meal prep so that you can make sure when you get hungry, you have something healthy to eat. But also not skipping meals, because that forces your body and your brain to crave unhealthy foods,
Got
mainly
you.
carbs that turns into sugar.
So hold on, say that last part again. Do what to do what?
So make sure that you're not skipping meals.
Not skipping meals.
Because we should be eating a well-balanced diet minimally 3 times a day.
Gotcha.
And you can eat small snacks in between.
Gotcha.
But that's what we skip breakfast.
Yeah.
Think about it. You slept 6 to 8 hours, and then
Yeah.
you skip breakfast, and then you didn't eat until 12. That's another maybe 4 or 5 hours, depending on how late your lunch is.
Mm-hmm.
So added to that 8 hours, that's 12 hours where your body did not receive food. So then you train your body to just hold on to food and fat. Because they don't know when they're going to get the next meal. So your liver just says, oh, I'm just going to hold on to everything.
Got you.
I'm just going to hold on.
Protecting you.
I got to have some food, because you got to feed the brain
Got it.
and the organs. And so when you skip meals in that same regard, when the liver has held on to as much as it could, now your brain starts sending signals to you about just being super hungry, and then you start to crave unhealthy foods. So if you can interrupt that fasting, eat, and then eat again at lunchtime, you just do your body a whole.
And you'll start seeing the results.
You'll
It's not holding, it's letting it go.
It's letting it go. And
Wow.
then with physical activity. And then you begin to not crave as many, bad foods, sugar, carbs, bread, pasta, so on and so forth.
Listen,
It's a
guys.
lot. It's a lot. It's a lot. But
I already know. Listen, I already know you definitely want to take it to another level. I definitely know. So, because Dr. Loretta has like her schedule is like super tight. She got calls on top of call, because she literally helps everybody. And to filter her calls, I'm definitely going to do you guys a favor. And she asked me to do this, so I'm going to do it for you. I want you, if you want a free consultation with Dr. Loretta Wall, I want you to go ahead. I'm going to wait for you to get your notes out. And I want you to text Dr. Lowe to 817-371-1947. That's area code 817-371-1947. All you got to do is text Dr. Lowe to that with your name and your number, and I'll go ahead and send it through for her so you guys can get you a free consultation. I think it's like 15 minutes.
yeah,
Do 15
just depending
minutes.
on what they need, we'll do a discovery call, see what they need, and then go from there.
Yeah, and you guys go ahead and do it quick. And do me a favor, if you know someone that you're looking at this clip and you're looking at this message right now, and they need some insurance, or they need to look at moving some of their money, they need some financial or wealth advisory, period, definitely go ahead and share this clip. And Dr. Loretta, thank you for hanging out with us at
My
the
pleasure.
Entrepreneur Blueprint.
Pleasure.
Most definitely shout out to my brother Wayne and my little people over there, Wyatt and my girl Logan. And thank you guys for just spending time with us today.
Absolutely. My pleasure. Any way to help the people.
Awesome. Listen, guys, go ahead, like, share, and subscribe. Do not have any stingy energy. And always remember, like I always say, out-earn the problem. And we'll see you on the next episode at the Entrepreneur Blueprint. It's your man Dream, and Dream Motivates, and my sister, Dr. Loretta Wall.